Welcome, everybody, to the Real Deals Podcast, one of the top-ranked real estate investing podcasts for the last 7 years. This is the place to be for investing strategies you can actually use, expert interviews, and, of course, some good old-fashioned entertainment. Now, here's your host for the show, Elliot, the REI guy, Smith.
Real Deals Podcast listeners, welcome to show 385. So, deal finders, this week is going to be a solo show, and I'm going to talk about a few things. I'm going to talk about some wins. I'm going to talk about some struggles. I'm going to talk about some lessons learned, something I screwed up on, and I'm also going to dive into what was just released. The Biden-Harris administration announces immediate steps to increase affordable housing supply and how you can capitalize, or how I'm planning to capitalize on this. So let's get into it. But first, so we can just roll right through, let's take a quick listen to our sponsor real fast.
All right, Real Deals Podcast listeners, I want to talk quickly about our show's sponsor, Ironbridge Lending. If you guys have not reached out to Ironbridge already to talk to them about funding some of your upcoming flip projects, I highly encourage you to do so. I've known the owner of Ironbridge for a very long time. I personally borrowed millions of dollars from them over the years to do a number of different projects, and I can say without a doubt, they are the best hard money lending company I have ever come across, and that is the reason why they are the sole sponsor of this show. I've had a lot of other companies reach out to me and want to sponsor this show, but I just won't do it. I feel like I need to be genuine in who we have sponsoring the show, and it needs to be somebody that I've personally done a ton of business with. So I personally vouch for their ability to be the best, hands down, in the world of hard money lending. You won't find better programs, you won't find better terms, and they're lending or will be lending in over 20 states. So chances are, if you're hearing this in whatever state you're in, it's definitely worth it to check out their website, reach out to them, see if they're lending in your state, and if they are, I would absolutely encourage you to do business with them. Another very cool thing to note is that they have a program for most rehabs where you can actually borrow up to 90% of the purchase price. Now, this is given the fact that you are actually buying a deal, which if you're listening to the show, that means you probably are. But if you have an actual deal on the table, they'll fund up to 90% of your purchase price, and they'll even give you rehab funds on top of that, which means that it only takes 10% down to get into a project, which is unbelievable in the hard money world. So do yourself a favor, reach out to Ironbridge Lending, have a conversation with them, see if they're a good fit for you and for your next project. I can guarantee you that you'll be happy that you did.
All right, guys. So here's what I got this week. So let's start off with something good, some good win that we had. So I've talked about before that our first apartment building that we bought was a 24 unit in Kennewick, Washington. We bought it in June of 2020. Right in the middle of COVID, with not knowing really much of anything. It was our first multifamily deal. We bought it with a few partners where we own a quarter of it. We managed it though ourselves. And so they live in Seattle. We managed it, and they've been great partners to work for. So we bought it for $16,850. So I was talking to a buddy. He's a commercial broker. And he was saying, hey, Elliot, I have some clients that are looking for a building. They run a charitable organization, and they need to do some affordable transition housing. And I can't find anything. And I'm like, okay, well, here's a couple of leads we've worked. But you know what? From everything you've told me, the building I own, not saying we want to sell it, but the building I own in Kennewick probably be a really good fit for you guys and what you guys are looking for. And so nothing happened for a couple weeks, month or something like that. And because we don't really want to sell it, because Chrissy's got it from $15,000 in gross rents to $21,000. Our NOI is going through the roof. She's just doing an amazing job. And so it's hard to find other buildings too, but I digress. So they called a couple weeks ago, and I said, make an offer. I don't know. I don't think my partners are going to want to sell, but make me an offer. So they came in with an offer, and it was a lot more than what we paid for it. We politely said no, because it just wasn't enough. So going back and forth a little bit, they wanted to do it. We had the upper hand to a certain extent. I mean, we want to do a good deal. We want to be fair and things like that, but we need to go find a 1031. That's the biggest problem, is we need to be able to go find another building. So that's our biggest concern. So went over to the guy's house with the agent and sat there for 2.5 hours because we were going back and forth, and they sent us a contract. I'm like, I'm not doing this back and forth contract stuff. I want to get in the room with these people. I want them to know who I am. I want to go build a relationship. This is what I do. And I just want to sit down, and we did. We sat down and talked for 2.5 hours. Really good people, and I appreciate their mission and what they're trying to do. So anyway, I kind of came back out where we were at, and it sounds like we're going to get up more than what they offered by a decent amount. And we also will get an 8-month close or sooner, so we can have time to go 1031. So this is really cool for a lot of different reasons. And this is the power of multifamily that I really didn't know or think of, but this is the cool thing about it. Now, if this doesn't close, no skin off our back, it's a good property. But if it does, we are going to go find a building. So we bought this one for 165. We're going to take our gains and leave all the money that we have in it. In this property, we owe about 1.3, and we're going to take that and we're going to go try to buy a $5 to $7 million building. So we'll take all that money, 1031 it into another deal, try to get maybe in a B class area, and it could be in Tri-Cities, Texas, Tennessee, Western Washington, Vancouver, Washington, not California, not Oregon. So if anybody has an apartment deal, $5 to $7 million range, we are looking for an apartment, most likely. So anyway, so I think we're going to put it together, which is amazing. That's the power of multifamily. Like, we shouldn't have to put any more money in, but if we think, which I truly, truly believe, inflation and asset appreciation is going to be very high in the next 5 years, I'd rather, if I think these buildings are going to double in value, I would rather own a $6 million building that doubles to 12 than a $2 million building or $2.5 million building or a $3 million building, right? Just simple math at that point. So pretty cool. I love doing big deals. This is, I just like doing big deals. It is fun. And so the nice thing is nobody was being a prick. Nobody was saying, haha, you got to pay our price or this. We did bend on some things and we wanted to do a good deal. So anyway, pretty excited about that. We also launched just today, this is Thursday, launched our multifamily marketing campaign. I built out a huge plan for multifamily marketing, broke it all down. I've actually had a couple guys that I sent the video to ask me to consult and actually have our team help set it up. So we started today, and first day we got a 200 plus unit in Houston. The guy wants, sounds like reasonable amount. I know nothing about Houston. And then he's also got another property on the west side. And so pretty exciting because those two leads cost us no money. And so it's pretty cool. I think it's going to work really well. We have a goal to buy 500 units in the next 18 months or end of 2022 with my buddy from the west side that we're buying the 32 unit with. And we had just bought the 25 unit with. So that's our goal. And pretty excited about that. And hopefully I have the bandwidth to manage it. I do have my sales manager running it, building the first call, building the rapport, and then I will underwrite it. My partner and I will underwrite them, and then we'll go in it later on. So pretty excited about that. My team, we started implementing Traction 2 weeks ago, and we have the executive assistant and we have Tony, who's my sales manager, my assistant basically, but does stuff on the sales side. And had it with them and Chrissy did a great job putting it all together. And it just, something clicked in that meeting, and night and day difference. We just seem to be moving a little bit smoother. Things seem to be going. And I'm so excited because Chrissy and I struggled so long building a team. We hired our first lady she didn't really do a ton for us. She was just basically there. She wasn't lighting the world on fire. And then I came in one day and she was sitting there watching Netflix while she was on her computer, quote unquote. And it's just we just had bad luck. And then we had our other kid that worked for us for about 18 months, and he was really good in a lot of ways. I screwed up and put him in the wrong seat, and it wasn't fair to him or for me. And I just think I overpromised and thinking that he was going to be more of a sales guy, and just wasn't able to deliver in a lot of ways. And it didn't work out, but we paid him for 18 months and we don't really feel like we made a ton more money because of him. And that was the problem. We were like, man, these employees, it's just, if Christy and I were just doing this, we make our $300,000 a year flipping houses, and it's just easy. And we weren't actually making more money, and our life wasn't that much easier. So then we got Tony this year, and he actually came to me, listened to the podcast, and said, hey, I want to learn from you. I want to talk to you. How can I help you? All these things. And he was still working a sales job at the time. And I said, hey, well, in your spare time, how about you call for me? And if you can revive any leads, I'll pay you like $2,000 a deal or $1,500 or $2,000 a deal that we close. But no hourly wage, and you just do it in your free time. So he started doing that for a while. Well, then he ended up moving to Florida and was quitting his job. And I'm like, well, he's like, why don't I come work for you? And, we'll do a small base plus commissions. And so that's how Tony came on. But then I kind of was screwing that up too, because I had him going 10 different directions and didn't really have the good systems built out. We didn't actually have a good, and what we've learned, Christy and I learned, was we didn't have a good environment for these employees to thrive. And it was really, at the end of the day, it was our fault. And so we failed them. The first lady, she just didn't have a good work ethic, but we were failing, and we were failing Tony again, and didn't want to fail him because he is just so loyal and just a good kid. Not a kid, he's 2 years younger than me, and so got him going over the last couple months in a lot better direction. We switched our CRM over to Forefront. It's been so much more smooth. We got some good support for him, and I'm getting him to do some things that he really enjoys and giving him more and more opportunities. And then we hired our executive assistant, and she has been amazing. She's taken a ton off Chrissy's plate. She is willing to help in any way she can. She'll tell me, hey, I'm going out to the apartment complex. Do you need me to grab you anything? I'll have her pick up things from time to time. She helped me when I did the painting for this guy. I had it commissioned. She's the one that put it all together. She's taken a ton off Chrissy's plate, and she's still learning, but it's, we were out of town for a week, and she texted, said, hey, I'm going to be running out of work. What else do you need me to do? And we're like, this is amazing. Somebody that actually wants to do work and learn. And she just has a great attitude. And so it really is cool to see. And so Chrissy is taking this bull by the horns and just saying, Ellie, we have to get organized. We have to build a good place to work. We have to have a good culture. We have to allow them to thrive. How do we make their lives better? How do we do these things? And we don't want to screw it up this time. So, because I tend to go 100 different directions and pull these guys. In my mind, everything's a nail and I'm a hammer. And that's why I need somebody like Chrissy to rein me back. So if you listened to the show a couple weeks ago where we were doing the Strength Finder, this is exactly why. And so everything seems to be going good. We've tied up like 4 wholesale deals in the last 2 weeks. We tied up the apartment deal. We're just rolling really, really, really well right now. So very excited about that. So one lesson we learned that last week, and I talked about it a little bit, was the financing of these apartments. And really, as we dove in over the week, last week after I shot the show, and this week, it's funny. And this is where, like, I was trying to get into development 2.5 years ago, and I had some good opportunities to buy deals, and I just kept coming in too low. And I thought I knew the cost. I thought I knew all these things. And then I'd see somebody else buy these lots and they'd make really good money. And I'm like, I totally missed the boat on this. And so at that time, I knew I didn't know what I didn't know. And so I was always going to go more conservative on the offer side because it's uncomfortable. It's like if you're getting into wholesaling, you're always going to, most of the time you're either going to go really high because you don't know values, or you're going to go really low and then it's going to get rejected because you're way too low. So knowing values matters, knowing your costs matters, all these things matter. And so 2.5 years I wanted to do development, and it just wasn't working. And so how we alleviated that is I partnered with a developer and basically said, you tell me what I need to tie it up with. We'll see the costs as we do projects, and I'll give you half the deal. And so that seems to be working really well there. I'm learning a lot more. We're getting more development deals under contract. We have a 60 lot subdivision that I just got drawings back for this week. And I still haven't ran one all the way through, but I think it's, I'm moving somewhere. I have projects that we own. And so we're understanding and learning, and that's how you have to do it. So, but partnering with people that know more than I do. But the one thing we didn't know about financing. So when we looked at these properties, these multifamilies, we looked at them just black and white, right? What is the current cap rate that these people are asking for? And what can we raise the rent to? And what's our cap rate there? We didn't know. And like, how much cash do we need to stick in this? All these things. And so that is so far from the truth, because on paper, the new building that we're buying, the 32 unit, it looks like a terrible deal. It does not look very good. I mean, it's sub 5 for the cap rate, and things are trading for 6 here. But when you dive into the financing and you work the bridge debt financing, and then you work your perm debt financing, and you really maximize your upgrades. Like, we were just going to be like, oh, we'll just kind of upgrade the units and we'll just raise rents to here. But when we started looking, we're like, no, we could probably spend $500,000 on this building and increase the rents from where we thought maybe the 1050 range on the 2 bedrooms to 1175. this all of a sudden turns into an amazing deal, like a really good deal, but obviously with a lot of effort. But then we don't also have to stick, $1 million down for our down payment plus $500,000 of rehab. We can go get a loan that encompasses all that, kind of like we're burying this property, right? And that's buy, rent, rehab, and refinance. And we can do it very quickly because they're all month-to-month leases. And so if we can go in there and just turn these really, really quickly and get these rents to where we think they can go, even on a medium optimistic level, not even the full optimistic, this deal turns into an 8+ cap deal. And so, but when I first made my offer, I made my offer like $300,000, $400,000 below where we actually are right now. And I was about to lose the deal, not knowing what I didn't know, right? And so we just decided, let's go for it. Let's tie it up. Let's go for this deal. We want to own units. We think there's going to be appreciation. We think all these things. So let's go for it. Worst case, we have our financing and our inspection. And so we're so glad we did, because now I feel really good about it. Now, I still think we're paying a fair price. I don't think we're stealing it in any way, but I think it's a fair price for what we're buying it for. But if I just looked at it black and white, knowing what I didn't really know, we would have missed out on that deal most likely. And so I've done that with the development. I've done that now potentially with multifamily. So the key here is, and I talk about this all the time, is if you get leads or have potential deals and you just don't know what you don't know, go find somebody that does know these things and just give them half the deal so you can learn. And it's like, you're paying for knowledge right here. So I'd rather make 50% on this deal, right? Or on a development deal or these deals, because I've made nothing on the other deals that I missed out on because I didn't price them right. And I didn't know what I was doing and I screwed it up. So I made zero money. Now, if I partner with these guys, I make money. So it's just a different way to look at these things. And that is one of the biggest learning lessons I've learned in, over my career. But it's just, there's always going to be the next level of things you just don't know. And that's why this real estate game is so much fun and so exciting. And I love it so much, is because I can continue to learn new things and increase the skills that I have to step above other people in this industry and add more value and do bigger and better deals, right? So that is the learning lesson on the financing. The mistake I did make a big mistake this week, and it's a good learning lesson for sure. As many of you know, I work in this business with my wife, and she is kind of taking over the reins and running the company. I'm still probably the CEO visionary, but she runs the day-to-day. And so we had put on the calendar to go get a hotel. We had some childcare, get a hotel for the night, a nice hotel, and for the day. But we were going to spend all day together, and we were going to do yearly planning, and just planning in general, because we haven't done this for so long. What do we want our business to look like? What kind of culture do we want to build for our employees? What kind of tasks and responsibilities do I have and do you have that we can outsource or get off our plate so we can focus on these things? What are our goals? What are our dreams and dream list? I put a G150 jet on there by 2023, and I would only buy it if we actually needed it and we were buying a bunch of units and traveling a bunch. But that's just a dream, right? We have goals and dreams. Or I wanted $100,000 or $200,000 a month in cash flow for a multifamily. I wanted $100,000 a month from cash flow from the call center, which I think is going to be really soon at some point. And I wanted to sell some courses or a book or something, and so make a little bit of money. And maybe if I don't make any money on there, it doesn't matter, but grow out my brand. So, and how do we get there? So we did this. However, I overslept yesterday and missed my gym, which is kind of me getting going in the day. Overslept, then missed my gym session with my trainer, which I never do. I then was very lethargic. I went and ran some errands for some buddies, and Chrissy texted me and she's like, "Hey, I'll be at the restaurant at like 11. I didn't end up showing until 11:30 because I just had things that I thought were more important. I was pushing it back, and this is where I screwed up, because I've done this in our career and I better stop, because it's not fair to Chrissy. But and then when I got there, I was tired, I was lethargic, I was kind of out of it. I'm like, I need a nap. I just don't feel that good. So ended up taking a nap when we got to the hotel. So we didn't actually start doing our planning until 3:30. And it's like, we got a lot done, and it was a really enjoyable day. but it wasn't fair because Chrissy gets tired in the evening. I'm the night owl and she's the morning person. And it wasn't fair because it looked like I just give a shit about myself and will kind of do it in my schedule. And that's where I've screwed up the most. So if I can, tell you, like, Christy and I have almost gotten divorced, handed me divorce papers, 3 months after I quit my job at Franz, just 5 years ago. And working in your business with your spouse is extremely difficult and on so many different levels. But it's funny because we don't fight during the week when we're at work because we respect each other so much. I respect her to be the boss, the leader, the final say, keep me in my lane. And she respects me on the marketing, on the planning, on the vision and things like that. But and she doesn't ask a lot. She doesn't put a lot of things on my calendar and say, hey, I need you to do this or be here for me at this point. But when I do that, and I don't show up in a good attitude or ready to go and prepared, it's kind of a slap in the face to her and saying, I don't respect you and I don't respect your time. And so, there's going to be fights working with your wife. There's going to be disagreements. But I think the one clear thing that we finally figured out that we had to do is we both had to have our roles very, very clearly defined. And there is only decisions that we make together are probably the big projects or the big deals that we're going to do. Other than that, and that would be like the apartments or selling the apartment, things like that. And even then she has final say, but I have final say in, the marketing, what kind of marketing we do. I have final say on who we partner with, how much equity we give up or don't give up, where we raise the money, how much private capital we have, are we wholesaling this deal? Are we flipping this deal? I have say in that's all my decision. She has no decision power in that stuff. She will tell me if we have money to do these bigger deals. That's kind of where she'll step in. But I have a general idea, but she'll say, hey, this is what we have. This is what you need to do. And you're going to need to raise this much money, or we only have this much money to put in these deals. And then, so what she does is she keeps a team on track. She keeps things going. She puts the systems in place. She handles all the accounting, all the payroll, all the asset management, where she's increasing rents, increasing NOI. We've talked about that before. She's the one that's growing those things. And she also gets to make final to say on all employee hires, all employment decisions, all pay raises, all buildings that we buy, all these different things. And so being very segmented in that thing has helped us so much. But again, I need to show her that I actually do respect her by showing up to meetings on time. So that is my learning lesson and a mistake that I made. So let's jump into where I think there's opportunity coming up in the next few years. So the one thing, if you've been paying attention to the real estate market, it's hot as it's ever been. Don't believe the headlines that you see where they're like, inventory's risen X, this much 20%, or these things are slowing down so many percent. I did a podcast with Aaron Amuchastegui on Real Estate Raw Stars last week going over headlines. And, when they're talking about inventories raising 20%, it's going from like 0.6 to 0.7 months of inventory, which is still historically low. The only thing that slows the single family housing down, in my opinion, is affordability. And while interest rates are where they're at now, I don't think we have an affordability issue. What does become an issue is if the Federal Reserve has been buying $120 billion a month of securities, and a security is a financial asset instrument. They've been buying about $80 billion in bonds, stocks, junk bonds, things like that in the markets, and about $40 billion in mortgage-backed securities. Those are the assets so if you go get a mortgage, it goes into, they package them up into a mortgage-backed security and they rate them AAA, triple B, whatever it is. And then they sell them as mortgage-backed securities in a big pool of loans. And so most people buying these before were investors, hedge funds, pension funds, insurance companies, things that need a decent return that is relatively safe. And so, but interest rates being so low, they're actually getting a negative return because inflation is at around 4 to 5%. They're actually getting a negative return buying these. So the only person that can buy these and stabilize the market is the Federal Reserve, because most investors don't want to buy it. They don't want to buy mortgage-backed securities at, let's call it a 3%, annualized across the board. When inflation's at 5%, their net return is a negative 2% yield. And so that's what they mean when they're talking about negative interest rates. It's not usually that the interest rates go lower than 0%. The Fed that sets a benchmark for interest rates. It's more saying like the interest rates are zero, but the yield on assets or things are actually negative. So like if you're buying a 10-year treasury, I think it's at 1.35% return annualized. If you buy a 10-year, lock your money away for 10 years in a treasury bond, which they've been saying for 50 years, buy treasury bonds for 40% of your retirement portfolio. Well, if you buy a 1.35% treasury bond yield, you're actually, and inflation's 5%, you're actually losing, what is that, 3.65% negative return on your investment. And so nobody's buying them. That's why, that's why they're so cheap. But the Fed is buying them. The Fed's buying these things. It's crazy. So if the Fed stops buying these, when they're talking about it a lot in the taper, they're saying we're going to taper, the quantitative easing, that will affect interest rates on the mortgages. If inflation gets too high and the Fed has to raise their Fed funds rate, interest rates on mortgages goes up. Mortgages interest rates is not set by the Federal Reserve. Mortgage interest rates are set by supply and demand, who's buying the mortgage-backed securities. If people aren't buying them, then the interest rate needs to go up to entice people to buy them. That's what happens. And if they have the Fed's funds rate and people are, the rate goes up with the Fed, then why would they buy a mortgage-backed security at 3% when maybe the Fed rate is 2% and then treasury bonds are 4% or 5%, a lot safer asset, right? So that's what happens. If interest rates go up, the housing market slows down immediately, in my opinion. And the reason we can point to this is in 2018, the Fed was raising the Fed fund rate. They hit 225 basis points, which is 2.25%. And the mortgage-backed securities interest rates for single-family mortgages got in the 5.25%, 5.5% range. Seattle lost $60,000 of median value in 6 months. The faucet just turned off. So the Fed has backed themselves into a corner, and they've put some issues out there. But we've also got shortage. We got 3.6 million housing units short in their economy right now. So who knows? All we know is supply and demand. We need houses. We need places for people to live, and we need affordable housing. So this comes into this deal. So fact sheet: Biden-Harris administration announces immediate steps to increase affordable housing supply. So you can get this, go to whitehouse.gov and just go to Google and type in affordable housing White House, and it'll come up the article. And you want to read the one from the briefing room because it kind of lays the things out a lot better. So basically what they're saying is that 1 out of every 6 homes purchased in the second quarter was acquired by investors. Hedge funds are buying a decent amount of houses. This isn't really killing supply. They just want to say it is, but it's not killing supply. They still only own a super small slice of the market, but it is still hindering and keeping supply down because there's just less houses for people to buy. So what they're doing is they are going to put a couple different things in there. So today the administration is announcing a number of steps that will create, preserve, and sell to homeowners and nonprofits nearly 100,000 additional affordable homes for homeowners and renters over the next 3 years, with an emphasis on the lower middle segments of the market. And so I don't know where they're going to sell these homes or find the homes to sell, but maybe they'll start building homes, and they guarantee they won't be affordable because they'll cost them 10 times as much. But here's what their federal agencies will be looking for: boost the supply of quality, affordable rental units. And this is going to be by launching a partnership between the Department of the Treasury and the FFB, which is a federal finance bank, and the Department of Housing and Urban Development. And they're also going to boost the supply of manufactured housing and the 2 to 4 unit properties by expanding financing through Freddie Mac, and along with Fannie Mae and the Freddie Mac, the Federal Housing Administration exiting policies. So they're going to change some of the policies because it's hard to finance manufactured homes and things like that. And interest rates tend to be a little bit more in the 2 to 4 units. So they're going to increase, they'll probably make them easier to buy those things, which is very good news, right? That's very good for anybody out there that's trying to build some rental wealth. Like we started out with, single families and then 2 to 4 units. So they're going to make more single family homes available to individuals, families, and nonprofit organizations. So the houses they take back through foreclosure and Freddie Mac, they usually go through HUD and they sell through HUD first, and usually they sell to owner occupants first. If nobody wants to bid on it or buy it, then they will sell it to investors. So they will do things to expand it. So they probably will hold investors out longer. make more single family homes available to individuals. And I just read that one. Work with state and local governments to boost housing supply by leveraging existing federal funds to spur local action, exploring federal levers to help states and local governments reduce exclusionary zoning, and launching learning and listening sessions with local leaders. Basically, what they're going to say is they don't want zoning density. So Portland, Oregon, a couple of years ago, I think it was last year, put a law in there that there's no more single family density. So if you have a single family lot, now you can get duplex. There's not a minimum single family density on there to increase housing supplies. When if the cities would just figure out how to streamline permits, make it faster on the permitting side, stop putting all these freaking engineering. It's in the engineering. They're over engineering these homes so much. And it's just unbelievable. They're forcing you to put solar on. They're forcing all these new things that just cost so much more money that are not needed. I think we solved this housing price process, but they don't want to try those things. They can't lower their permit costs because that's how they're making a bunch of money. But it's taking, in Kirkland, I have my good buddy that's got a ton of deals in the pipeline, Greg Lynch. Some of these are taking 15 to 24 months just to get a permit to build a single family house, one house down, one house up. It's just, you can't be affordable if you have all these holding costs, plus then all the engineering things they have to have on it. It's just the architecture, all these different things. They just add so many costs. And so it's just really unfortunate, but they're also relaunching the Federal Financing Bank HUD and risk sharing program. Don't really know what we're talking about that. Increasing Freddie Mae and Freddie Mac's low income housing tax credit for investment cap. So they're going to start giving some tax benefits for low income housing, making a funding available for affordable housing production under the Capital Magnet Fund. They are going to making financing more available for manufactured housing, making financing more available for 2 to 4 units, prioritizing home ownership in the sale of FHA insured properties, promoting the sale of distressed HUD properties to nonprofits, expanding the exclusionary period for HUD, which is going to lengthen the exclusion of investors buying stuff, improving outreach to nonprofits and real estate owned sales, leveraging federal funding to spur state and local action, all these different things. So what this is saying, so as soon as I read this, I called my accountant who owns a large CPA firm. We're actually going to get him in here on the podcast here in a couple of weeks. He owns a large CPA firm out of Vancouver. And I said, hey, did you see this stuff that's coming down the pipe? And he said, yeah, I saw it. I said, hey, we need to hire an intern or somebody that's lower level to go do research. I want them to research and pull all of the federal tax low income housing things on a federal level. I want to know everything that's available for low income housing from a federal grant tax benefit standpoint. Then we get that. We'll build a boilerplate one that's, across the nation. Then I want him to build one for Washington State, for the state level, what state money is out there and available, what state grants. So I know when I was doing some research on this last year, you can build, if you turn these multifamily into affordable housing, you can actually just not pay your property taxes for 10 years. Like they'll cut out your property taxes. If you're like renting to people at 80% of the median income, and there's a percentage, like they can only do 35% of their wage, but then it's at 80% of the median income. So say you're at 50,000, median income in your area, it has to be 35% of the wage for a $40,000 income. And then I want to know on a local level, because I know my town, I had talked to them, the town and the county had both got $150,000 each for spurring affordable housing, and they got to use it at their discretion. And I want to know on a local level. So we have a guideline of exactly what properties qualify, exactly what we can build, exactly what matters for low income housing, because I think there's going to be a huge opportunity to help fund this space. Because before, people didn't want to build affordable housing because they didn't make any money. Like the reason people build such big houses is because the biggest cost in the houses is permits, and then your kitchens and your bathrooms is probably your bigger costs. So if they only did a 1,300 square foot ranch house, and they have a same size kitchen and bathrooms, 3 bed, 2 bath with a decent kitchen and 2 bathrooms, then their cost to build per square foot is going to be a lot more than if they did a 2,000 square foot, 3 bedroom, 2 bath. Because in your living room, the cost to build in your living room, because there's nothing there, is probably, let's say $50 or $60 a square foot, but your kitchens is $200 a square foot. So it balances out if you have more dead, open space. So that's why we have such big houses. but there's no money in doing smaller houses because it costs so much for the permits. So, and permits and the building costs and things like that. And the land is just through the roof. But if there's an opportunity to take government money, which a lot of people, if you're listening to the show, you probably took some government money last year from PPP or EDIL and got some money to help you out. They were just throwing it from the rafters, it seemed like. Well, this is another opportunity to go grab some of that. And so if you can start learning a skill on how to develop and buy or build or partner with people that can do these things, and you can be an expert in putting affordable housing subdivisions together, conversions to multifamily, you can have a niche and be so much farther ahead of people. So I think this is an opportunity. Don't pass this up. If you're newer in the game, you still want to be keeping looking for your driving for dollars and calling those people, but start learning the skill like this, because this will separate you so much from most of the other people that are just wholesaling and trying to do a single family house, and it's going to get harder to wholesale and it's going to get harder to find these deals. I just read an article that Oklahoma just passed a law that they are now requiring real estate wholesalers to have a real estate license and abide by the same code of ethics as agents in their state. So things are going to change. There's a book that my partner always brings up. It's called Who Moved My Cheese? And basically the premise of the book is your cheese is always going to move, with your cheese being what you're making your money on. It's always going to move. You can't expect to do the same thing every day and have it work. Look at marketing. Look at all the things that have happened just in the last 10 years. You have to be able to pivot. And this is where I've learned so much from Tucker, and just how do you pivot? How do you change? How do you adapt? How do you get better? How do you be more consistent? These things. But you need to look and see, okay, I might be able to make money right now flipping single family houses or wholesaling single family houses. But what happens if I start doing less flips and I start making less money, or all these things make it really hard and I don't make any money? You're gonna go get a job? No, you're gonna learn a different skill and level yourself up, hopefully, to make more money and make a bigger impact in society, because you get paid by the difficulty and the amount of problems that you solve. So my dollar per hour is raising very, very quickly, because I'm solving harder problems and I'm narrowing my skill gap. I'm not doing $10, $20 an hour tasks. I'm only doing $1,500 an hour tasks right now. And so leveling yourself up and learning new skills is so important. I probably watch 20 or 30 hours a week, maybe not 30, maybe 20 hours a week of YouTube. I always have it playing, and I'm always trying to learn something new. I'm learning about financial markets. I'm learning about the Fed. I'm learning about the history of the Fed. I'm learning, about interest rates and all these Fed funds rates and the overnight repo. And you need to understand how money works and how money flows and how business works to really build a successful business like this. And so you are a student of the game. And if you're listening to the show, you are a student. You are learning and listening. And hopefully I'm giving you enough good knowledge, to grow. And that's where I started being a student with Tucker. And I grew a lot with him. So pretty cool stuff. And so I'll talk about this affordable housing stuff more once my accountant starts building those things out. Maybe I'll make it available, but at least maybe on a federal level. But dive in, call your accountant or call somebody or have somebody do some research. This is a good admin task to just go research. It's boring. I have read the tax code and gone to our state website and gone and read some of these things for hours. I'll read these things for hours and hours and hours, and it's so boring, but you have to do it and you have to learn. And I'll leave you with this one thing. Our good buddy Artem has been on the show a couple of times, done over $250 million in apartment deals. Went to college, got a master's in real estate or something like that, real estate finance. And he says, I wish I wouldn't have gone to college. He said, the one thing that I need to know better than anybody else is know my zoning, knowing what I can do with a piece of property and knowing what its value is. That's where I wish I would have spent all my time when I first got started learning those things. So if you're trying and struggling to find some place to go learn your zoning code, your city's zoning code, go learn the permitting process, go learn values, and go partner with guys that are maybe know more than you if you have leads. So they'll help you, teach you construction costs and things like that. But we're building apartments, and I don't know anything about putting posts in the ground or building these things, but I found somebody that did. But what I do know is what a good deal is, and I know how to finance it, and I know how to fund it. And I know how to lock it up. So learn a skill. And I would start with knowing zoning, and learning affordable housing and learning some of these things that are coming down the pipe. So hope you guys got a lot out of this. This is a cool show, I think. Wins, struggles, and lessons learned. And I'm learning just like you guys are. And that's why I love doing this show, so I can actually reflect on the things that I am learning. So hope you have a great week. Get after it. Go find some deals.